Hi, ladies and gentlemen. Welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Good morning, everybody. A warm welcome to you to our webinar for this beautiful Friday. Okay, good. Right, so the sound is fine. Thank you very much for confirming. And we'll move on. Right, so in front of you on your screen, you'll see the slide. So there's the welcome slide. Today we are dealing with number 4 in our Exploring the IESBA Code webinar series. And as you can see at the bottom, it says the 4th webinar focused on inducements and responding to NOCLAR. Right. So that's what we'll be dealing with today. This is me, Lettie Jansen van Vuuren, and I will be your facilitator for the next 90 minutes or so. This is some background on me. I think most of you have attended my webinars before, but you're more than welcome to read through this if you have not before done so. All right. So what's on the agenda for today? We've got our 4 modules. We're going to start off with a recap to look at what we've covered thus far and what today is all about. And as you can see, today is all about module 2 and 3, which deals with the installment 7 and 8 that was issued by IESBA. And then we've got the topics there, and module 4 then deals with some South African case studies that we found specifically with NOCLAR. All right. Before we start with the webinar, there's just a quick little quote for today, dealing with integrity specifically, because we're dealing with NOCLAR and as well as inducements. And it says here that integrity is choosing your thoughts and actions based on values rather than personal gain. All right, so very important there. It's when you look beyond the personal gain to guide your thoughts and your actions. Right, let's go and start with module 1. Module 1 in our webinar contains our basic summary, where we are looking with an introduction. There's the structure of the code, and then we've got the South African amendments. Right, so let's just quickly go and have a look. For today's webinar, the publication series that IFAC developed is done in association with IESBA and IFAC, all right? And it highlights important topics of the code, because not everybody knows the code off by heart. I mean, okay, nobody. I would venture a guess as to say nobody knows the code off by heart, but we can certainly go and refer to the code whenever we need to. And the mistake mustn't be made to think that this is only applicable to auditors. All right, it's not. There are certain sections in the South African code that is also applicable on auditors, additional ones. But this code of conduct is developed by the International Ethics Standard Board for accountants. All right. So our first webinar focused on the 5 fundamental principles, and we looked at step 1 being identifying threats. Our second webinar was also continuing with a conceptual framework dealing with evaluating threats and addressing those threats as step 3. So we've dealt with the 5 fundamental principles. We've dealt with the 3 steps in the conceptual framework that relate to threats. And our third webinar then focused solely on independence and then conflicts of interest. Today might have a little bit of the conflicts of interest coming through, because when your client wants to give you a gift, or they give you a gift, it is normally, or it could be, with the intention to influence your decisions, your opinions, the outcome of whatever engagement you are performing for them. So you've got to be careful, because remember, with conflicts of interest, you have to be independent, actually independent, and you've also got to be seen to be independent. And how independent would you actually be if they've given you this massive, massive gift that people basically perceive as a bribe? So you've got to be careful. So we also need to take into account independence and conflicts of interest. And when we're dealing with hospitality and gifts, remember that we are there looking at our fundamental principles being affected, and they would be integrity and objectivity and professional behavior. Right. So as we've said, today's webinar will be focusing on inducements as well as NOCLAR. All right. NOCLAR specifically for public account. I always say public accountants. Apologies, ladies and gentlemen. Professional accountants. Can I just say PAs for the rest of the webinar? NOCLAR for PAs in business, PAIBs. All right. So you'll have your next section, which will be summary number 2, and number 3 is there as it was with last month's as well. All right. So on our next slide, we're going to start with module 2. So let's get straight into inducements. The first slide asks, what is an inducement? What is an inducement? So if we go and we have a look, remember that before we get to this, let me just start off with inducements in general. In some cultures, exchanging gifts and hospitality is a very, very big factor in building and strengthening business relationships. You guys certainly give out Christmas presents as well to your good clients, don't you? Maybe not even to your good clients, maybe to all your clients or your clients and new clients. Even if it is something small, a pen, something with a branding on, okay? Or a little calendar for next year, or a little whatever, tax guide at some stage. But it's important because when you provide something of yourself and you present something to someone else, it has always been seen to be a sign of good faith. It builds the business relationship, it builds personal relationships, and it can even strengthen business relationships. Remember that in some countries, you cannot even gain access to negotiations to enter into contracts unless you have a massive party to which everybody, all the employees and the families are invited to. And that could be seen as a bribe. And then we're sitting with how it's going to affect your independence if you are performing in a test function, and how that then is affecting your conflicts of interest, because it might create a conflict of interest. But at the same time as strengthening and building relationships, the flip side of the coin is that those and other inducements can actually threaten a PA's ability to objectively act, and also to act with integrity. Okay, so their ability to be objective and act with integrity. So the PAs need to have proper checks and balances to safeguard in the public interest. Remember that that's what we are there for. And that's the perception, okay? The perception still is there that PAs are there to safeguard the public interest. And when we find something, we will report on it. So this is now something that is not allowed to actually influence our objectivity. All right. So looking at the term inducement under the IESBA Code, inducement refers to anything that is used to influence another individual's behavior. Because you entice them, you induce them to act differently or to influence them. Sometimes the influence is part of just the natural relationship building, but other times the intention behind this inducement is to improperly influence somebody to now go and do something unethical. So your first port of call is to establish whether this is part of the natural business regime or whether this is improper influence. So is it okay, or is it improper influence? Because when we've got improper influence, then we should definitely take it further.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.